I guess the assumption on where the U.S. economy goes will tell you generally what asset allocation you should employ at this point. So what is your assumption on the U.S. economy over the next 6 months?
Our assumption is that we will have a lot of volatility still going on, and you know that there's so many moving parts. We're just getting informed from this earnings season as well as to how companies are setting up. So we have also acknowledged that this risk of recession has gone up quite a lot, and we are now forecasting a mild recession in the first quarter, in the first 2 quarters of next year.
So do you think in terms of what markets are positioning around that recession trade, is it fully priced in? And do you think stocks can continue to fall even if we don't see a recession across developed markets?
Yeah, I think on the one hand, I believe we come a long way to, have growth risk, inflation risk, stagflation risk, and then pricing full recession risk. We're still a little bit concerned as to whether the analyst estimates for this earnings season are quite optimistic. And I think we have just kicked it off last week. And as we see also last night, companies are using this earnings season to give us more information as to how challenging they see the environment coming up, and most probably these analyst estimates are still a little bit too optimistic, and there's more room for downside volatility.
Okay, so within the equity markets, generally what looks better than others, and I'd even throw Europe in there because there's this looming energy risk that's still almost binary there.
Yes, well, this week will be a very telling one for Europe, and I think it's extremely challenging to have two things at the same day. It's the ECB's decision to raise rates to give us more information on the anti-fragmentation tool, and at the same day we get more clarity as to whether the Nord Stream pipeline will go back to full capacity, some capacity, or back at all. So that's a very challenging outlook for Europe, and I think that is also what's weighing down markets there. Just to clarify in terms of our expectations, whether Nord Stream is coming back on, we think for two reasons that Russia will continue to deliver gas. Number one, that is because all the leverage would be going away if you just switch off the gas pipeline. Then there's only one way to go, that is up. And then at the same time, once you switch off, you will have a price increase that if you don't deliver any gas, you will be not benefiting of these price increases, and these are revenues that Russia won't forgo. So that's the way we look at Europe at the moment.
Is that why you're also sort of reducing your exposure to commodities now as well, and perhaps also a sign that inflation is starting to peak?
Exactly. So commodities, of course, is challenged. On the one hand, you have these price increases that are still there, or price that are still much supported also by the inflationary picture. But as we go in price recession, you also see that the commodities complex is coming under pressure. What I think is more interesting in terms of allocating your money right now, and you touched upon it earlier, is the Asian equities or the Asian markets per se. You've heard me going on and on about being cautiously optimistic, looking especially into the second half of the year in regards to China and Asia ex-Japan on the back of the China reopening story. So we maintain that view.
And nothing you've heard in recent weeks, whether that's the weak economy or what's brewing in the mortgage part of the property market, not to get into the details there, nothing you've heard so far derails that view that you think China will outperform?
We have always been quite cautious on the property side or the property segment of the market. I think last year's experiences have taught us that there will be much, there's looming more news, that there's also a consolidation that needs to go on in the market. And it's just been reaffirmed right now. So the positive part about it is that the mortgages aren't repaid because the consumer doesn't have the money. many mortgages aren't repaid because they are projects that were stalling and that didn't get completed. And that is something that the government has already shown resolve to tackle, with the mortgage holidays. Maybe they will be going back buying land or inject liquidity and other ways to help these developments to go forward. So in that respect, it's just very interesting to see how the market is now refocused on these worries. I think it's not just the mortgage or the property market, it's also COVID that has now gotten back a lot of attention, which tells us it will be quite challenging for the regional markets to overcome the overall bad risk sentiment that we have and the global headwinds that are keeping the markets in this risk-off sentiment.